Hey, what's up everyone? Welcome back to a fresh new weekly Bitcoin video update. Just doing some quick housework here. In the previous video update, we have been discussing the possibility of further downside via an ABC going into a larger wave Y due to a larger triangle that could have been a continuation after a transitional wave X that has completed. We have been analyzing this triangle quite extensively for the past month or so, but since then, if you have been following my feed on X, many of you know that I changed my mind on the possibility of a bottom being in with a protected low, as you can see by the green line here at 74K. Now, this is fantastic news for the bulls as an overall general perspective because I was able to narrow down all of the scenarios utilizing the Elliott Wave Theory that finally shows potential upside even with the most bearish scenario, as you can see here. This will be covered as well. So that means we must adjust our bias accordingly, even in the shorter time frames. One of the most dangerous things a trader can do in this market is keep a perma bull or a perma bear bias. And the Elliott Wave Theory's job is to keep us in check and remove any subjectivity or a potential emotional bias. And that being said, Bitcoin is now in what I think a temporary relief rally to the upside as a minimum expectation, even with this bearish scenario. Now, we have a lot of obstacles to go through, of course. However, we are fairly clear of any immediate danger or sell signals because even with the most bearish scenario, as you see here, the bearish scenario is potentially also working in tandem with the bullish scenario where we should be working for a three-way move to the upside to potentially retest the 100K levels before reevaluating any potential further downside. Now, the reason why I have downgraded this bearish scenario by quite a bit is because we have been sticking with the narrative of a larger wave 1-2 on the macro. So let's pull up the macro and see what so that you can see what I'm trying to say here. So if we pull up the daily time frame, this is the idea that we have been continuing to stick with for the past months. This is where we are working for an extended fifth wave to the upside. Now, the reason why this is important is because any further in time for this wave 1-2 potentially ruins not only the suggested guideline of creating smaller nested structures against the parent degrees, or the higher degree rather, it would be hard to find any real suggested three-wave variation that could fit into that macro structure as we have here for the larger wave 1-2. So if we're looking for, another corrective style structure that's going to extend in time, it would be very difficult for me to believe that this would be a wave 1-2 at this point, as this wave 1-2 of just the fifth wave is larger than the parent degree wave 3-4. So we essentially want to have this wave 1-2 as shallow as possible, and I think that we have met all those expectations, which could be fitted as a WXYZ or a triple zigzag. Now, many of you who are an Elliottian or practicing the Elliott Wave Theory might find that this WXYXZ is a little bit too rare. However, listen, because it is still fitting into that characteristic. Now, if we pull up this bullish scenario once again, as you can see here, everything was working way too correctively. We had so many overlaps. We had many fake outs. We had many periods of times where the market was thinking that it was going to be a bullish continuation. Instead, we saw further downside. However, with each further downside, we also saw potential buybacks. And this is the reason why this WXYXZ also fits that ticket quite nicely, because everything is also fitted as ABCs or WXYs. So we have an ABC going into wave W. Perfect. We have a triangle for wave X. Perfect. We also have an ABC going into right here into a wave Y, and then we have another WXY going into a wave X, and then another ABC here going into that wave Z. So this is great news because everything is showing that it's a controlled pullback here for this larger wave 1-2. The extensivity of all this move down to the downside is not showing any indication of a bearish move. Now, we do have that bear market scenario where we can be saying that this could be working in a leading diagonal, but I just don't like the size of this leading diagonal. But either way, this most bearish scenario should still be working for further upside into that mid 90s to the lower 100K regions, retesting any major Fibonacci levels at the 61.8% or the 78.6%. Then we can start reevaluating if a bear market scenario is even going to come into play. But what's important here is that if you pull up both scenarios, as you can see, we have a hybrid overlap. We're looking for a three-wave pullback for both scenarios. And we're also looking for some further rally to the upside, retesting that major Fib levels, like I mentioned. And then at that point, we can discuss whether this will be a rejection zone or a continuation for a wave 3. So we are in a pretty good spot when you're strictly speaking from an Elliott Wave Theory perspective, because these are the waves that you want to be trading, because even with the most bearish scenario, like I said, it removes all the bias and we have the potentiality of going further up. So that means from a probability perspective, even with the bearish scenario, you should be looking for longs on this next pullback, at least with lower risk, that is, because all of these scenarios show potential upside. So I think that's the key driver point here, ladies and gentlemen. Even with the most bullish scenario, even with the most bearish scenario, you're still looking for some kind of three-way pullback and then looking for further upside. And just doing another few rounds of housework here. As you can see here, the move off of the lows here was the most important thing for some kind of bullish continuation or a minimum expectation of a relief rally, just due to the fact that we had corrective overlaps as a motive wave of a 5-way move going into some kind of wave 1 as a leading diagonal variation, and the contracting variation is applied quite nicely. And with that being said, we're now going to be looking for quite soon, I would say pretty soon actually now, that we're looking for a three-way pullback to retest these levels here in the mid 70 to the lower 80K regions before we can reevaluate at these levels here, so that can create a partner leg as a minimum expectation for this wave 1 or wave A. So that is my overall view of Bitcoin, ladies and gentlemen. I am now turning into a bull just based on the balance of probabilities. I think we are working with a protected low here at 74K, and I do think that we are working in a wave 1-2 of a macro degree. So with all that in mind and the constructed move of the macro, I think that we may be working in a more bullish scenario to the upside that could potentially finally lead us to new all-time highs. But again, we will reevaluate at these levels here, and always make sure to follow me on X to see how this three-way pullback is going to be playing out, because this wave 1-2, we just don't know the severity of the depth of it. We can really turn into any corrective pattern other than a triangle, that is. Then we can start figuring out how this next move is going to be playing out. Hopefully that was helpful, ladies and gentlemen. Thank you very much for joining me here. Have a fantastic rest of the week. Bye-bye.